Hello guys, today in this video I will give you my opinion about Alibaba stock after the what happening in the last few weeks on China. And when we talk about Alibaba, we talk about probably the biggest and one of the best companies on China, a really undervalued company at the moment. And when we talk about Alibaba and we talk about valuation, it's a good company, a really high quality company. And when we talk about analysts, most analysts have a price target above $150 for Alibaba. Some have $200, and there are people who think the intrinsic value of Alibaba stock is around $300, and but yet the stock is trading around $85. It looks really cheap, but there are a lot of risk on this company. So in this video we'll talk more in depth about it. So first, Chinese stocks are lagging when you compare to the S&P 500. For example, the QWeb, which is the ETF who tracks some of the biggest Chinese companies, are down almost 16% this year. Alibaba is down around 7% this year, which is not bad when you compare to other Chinese companies like JD and Pinduoduo, who are down a lot. But in the last few weeks, we have been having really bad data and about the Chinese economy. It was expected for the Chinese economy to reopen big this year, and it's not happening. The the unemployment is still high. The economy is not growing as expected, but they are still growing. Bear in mind that 2022 was a really bad year, but even though they are not growing a lot as expected, they are growing. It's been a change in momentum, which is really good, and I'm still bullish on this. Actually, I've been traveling through Europe, and I've seen a lot of Chinese people traveling, which is a good sign. That's what I'm seeing at the moment in Europe. So I do believe that's a good indicator for me, at least. Even though data has been bad or not as good as expected, relations between China and the United States, in my opinion, are starting to improve. I do believe they hit rock bottom in the last few months, but now with Blinken visiting China and they are starting to talk again. This is really good and can be a really good catalyst for Alibaba and for the Chinese stocks overall. So, my opinion about Baba, it can be a double, a triple. It's a stock that is really undervalued. My value, when I talk about my intrinsic value, which is around $128 at the moment, it's a value I'm comfortable buying this stock. So trading at $85, it's a really good opportunity in my opinion, because it's really undervalued and it's a quality company. They have a lot of good things, even though I don't like the retail business. I do like e-commerce, but it's not a business with good margins, with high return on invested capital. I do prefer other types of company, but Alibaba, it's really undervalued. It's a really good company, and for an e-commerce and a retail company, they have really good margin. They are a really good company in the sector they have. So, what we like about Alibaba, they have almost all check marks. They have, for retail, they have really good margins, even though they have been in a decline in the last few years. So these margins are low when we compare to the history of the company. They have been growing a lot in China. They will continue to grow a lot. They have no debt. Basically, they have a lot of cash in hand, and they can pay all their long-term debt with the cash, and they still have almost $50 billion in net debt, positive. So they almost have 1/3 of their value in cash in hands at the moment, which is absurd. So they have a really wide moat. The return on equity in investment, it's not optimal, but it's not bad for a retailer and for a company who have been having a lot of trouble. So I'm expecting in the next few years the return on invested capital will be really higher when you compare to the present. So this is a really good company, an undervalued one. And when I look into my research, into my portfolio, it's one of the best risk reward opportunities out there. So I do like it, this company. I do believe there are a lot to improve in the future, and I do believe in the future the news will be better than we have now. So the stock can hit $200, the stock can hit $150 next year, this year, we don't know. But one thing I know, the upside potential is higher than the downside. The stock is trading around $85, but it could go down. It could go to $70, to $60. We have that in the last year, so the stock can go even lower. It can hit $50, but they will continue to be a really good company, growing and continue to make money. But the upside, if you talk about Alibaba hitting $150, $200 this year, it could be possible, which is a really higher upside than downside, but we don't know what happened though. But in the future, I do believe the Alibaba stock will continue to increase, the company will continue to be bigger and continue to increase their profits. So it's just my opinion. So for the stock next year can hit $150, $200, even they can go even higher, because there are a lot of problems in the company and on China, in China-US relations at the moment. That the moment that problems start to improve or disappearing, the stock can have a bump, and the investors who are patient, waiting for the stock to recover, they will be rewarded. So it's one of the best opportunities out there, in my opinion, when we analyze risk reward. There are a lot of upside potential, but there are a lot of risk involved as well. So that's what you have to bear in mind. So that is our quick take. The stock can go up a lot. I'm expecting a lot in this stock, and that's why I'm involved with the Alibaba stock. So I hope you find this useful, and I hope you like my opinion. So if you like, please subscribe, guys. Bye.